Brought to you by Telehelping, a virtual assistant staffing company for professionals.
Hello, everyone. My name is Cody Hall. I am the host of The Faces, Entrepreneurs Are People Too, and the founding CEO of Telehelping, a virtual staffing organization, and the hero and sponsor of my podcast. So thank you, Telehelping, for allowing me to start all my days with great people like Ryan. Ryan, how are you doing?
Fantastic. Thanks for having me.
Oh, Ryan, I'm very excited to have you this morning to kick off my first one of the week. And so, what I like to try to do in the beginning before I run off on any great conversation that we've already had is kind of tell the listeners today, who are we talking with? Who's Ryan?
I'm a portfolio manager. That's I identify as a portfolio manager. I just, I'm a Warren Buffett student, and I just spent my entire career just like obsessed with winning and capitalism. So that's what I've spent my entire career. But yeah, first and foremost, I'm dad. We were just talking about, you got a 3-week-old, and I was just on another podcast and they were asking me like, what's the biggest challenge of, at this point in your career? I'm like, well, I have 3 daughters. So that's really a layup compared to what I do professionally.
No, I agree. I actually, I love that you're a Warren Buffett student. I'm a big Warren Buffett fan. I'm a novice day trader myself. And so novice, probably expert to some, novice to you, I'm sure, in regards to my understanding of the markets and all, different assets. But, that's great.
Novice podcaster. So,
It's
we're
perfect.
perfect. And a couple of former Marines too. We got this,
Great.
we'll
So,
figure it
man,
out.
nothing but trouble at this point. Just a bunch of guys that's doing, you're measuring with their finger. But let's see, yeah, it looks good.
Yeah.
I mean, it's interesting though, like, since I've had like my young kid, I have not really wanted to wake up with the market. So it's been something that I was, I wake up and, I generally I treat trading like driving, right? I have to usually have a clear mind, to do it. And so if I'm too tired or anything else, stress or things like that, I generally try to avoid it because it is a very precise thing to do, right? To be involved in equities and everything. But I feel like my new son has came into this world and it's like made me a little bit more tired, right? And I think I feel an extra 15 years older these past 3 weeks.
Yeah, with when you invest money professionally, like any competition, preparedness is everything. So just knowing what your targets are and what your entry points are far in advance gives you a competitive advantage as an investor. So, like Buffett just constantly values businesses. We do the same thing. So you restrict your investable universe, you put a valuation on those that you're comfortable with the entry point. And then when markets move fast, you can move just as quick. So I use an analogy of driving. And in my book, I do the same thing where, if there's ice on the road or you're in a school zone or you're on the Autobahn, you're going to approach that operating environment very differently. And good portfolio managers do the same thing, where when there's risks are higher, risks are not stagnant in portfolio management. So when they're higher or lower, you generally want to change the level of aggression that you take as a manager. A lot of military tactics, same things. Sometimes you just have to be brave. And, like we said in the Marine Corps, bravery is not the absence of fear. It's moving forward in the face of fear. And, if you look back at the best investments I've made over my career, that's generally when things were the scariest.
Oh yeah, I mean, that's been the beginning of this year for me. I tell you, it's been such a crazy ride. And, I always say, something I was told me is never move faster than you can shoot. Right. And so, so like you can always run, you can always run and gun. All right. But if you can't gun, don't run. And
Yeah.
that's just been one of those things that, the risk profile for the market and, when I apply markets, just a representation of life, right? It is, I always call it the greatest representation of, the world, right? And so, if it's, going crazy and or if life's going crazy, maybe measure twice, right?
Yeah.
So, right,
Right.
maybe, take a second opinion. And so, I mean,
Mhm.
that's something that, I've never taught traders and things like that in my life, nor will I ever provide financial advice or my opinions. I steer away from that. Right. Everyone always asks me like a question about a stock or something. I always avoid it. Right. Not
Yeah,
that
it's
guy.
good.
Right. There's people get paid for that. It is not me. Like the only thing I get
And
paid for. Go
yeah,
ahead.
you make a good point, in the comparison with life and trading is, as a portfolio manager, you actually want chaos. So the more volatile, but if you're an investor and you're watching your account, you want calm growth. But if you're doing this professionally, the most opportunity you have is when volatility gets the highest, because then you
Yeah.
have entry and exit points.
Correct.
So we really, you don't want a nervous general, you want a calm hand on the wheel. We really thrive in those really chaotic environments, and it's just you have to be prepared, and that's what people are very reactionary, and you have to be proactive and ready. And like any sports competition, like Tom Brady doesn't, or Patrick Mahomes completely alters his approach based on what his operating environment is or what his defense is doing.
Right.
And in every capitalistic competition, success is required there to do that.
And you said it well. And I apply this in so much inside of life, company, trading, kids. Like, I generally, if I'm doing something, I have a planned outcome. You say entry, exit, I say, plan, termination of plan, right? What am I getting into this goal for, right? What is my purpose? And so, I mean, I think that whether it's from like operating telehelping, for example, right? I've always had to balance telehelping with
Mhm.
a company that wanted to grow faster than I wanted to grow, to be honest with you. And I don't want, I have to balance like a company being successful requiring more work than I want to work. Right. And so, I worked so many years burning both ends of the candlestick in healthcare tech. Right. And when I exited that, I was like, I could go, not having 20-hour days. Right. And so
Mhm.
let's not do that anymore. And so I try to at large, right, be done early afternoon most days of the week. And I overhire, right? Though I could definitely not hire so I could do less. So I can have more people who are going to work to 5, right? The company still goes. It's still doing its thing, but I don't want to keep going because, my goal from telehelping was, lifestyle company, right? Grown really well, but also I have to always maintain with, I'm like, great, I got all this work doing. I'm like, well, how did I get all this work? Well, it kind of just fell on my lap, right? I'm like, all right, well, why did I do this? All right, let me get back to my roots. So I would call it the Marine Corps back to the basics, right? I roll, right? Like, truly get back to the basics, back to my purpose. Why did I get into this trade to begin with, right? And it's so I could, live in Mexico and work remotely from my home. And so all those things always had to check back in with yourself, right? You have to look back. You're like, all right, I got the same core fundamentals. All right, working my way forward. And so it's in a balance, right? You see a trade go the wrong direction, how you should have already calculated how far you're willing to go the wrong direction.
Mhm.
So, and I think that's it's an allegory for life, right? You have to understand your risk tolerances for something going a direction you don't want it to go, and then understand when you've arrived to the destination that you were aiming for in the first place.
Yeah, you said something smart there. You work 20 hours, but now you're at a point in your career where you can afford not to do that. And I think a lot of people just think that you can afford not to do that without putting in the 20 hours.
Correct.
You really have to just, early in your career, just nose to the grindstone and just all in on your career. And then you get optionality when you get
Yeah.
older.
I feel like I should be a bulldog, to be honest. I'm so surprised I have a nose to be a nose or a tail.
Right. You see a lot of people that they just want that optionality and they haven't it's maybe it happens for some people, but a lot of people, they have to put in the hard work early, really build up that skill set, go through a lot of those experiences, and then you get optionality where you can throttle down a little bit, be there, pick up I remember my mentor said, the most important thing to him was picking dropping his kids off from school and picking them up every day from school, and in capitalism, you just don't have those opportunities unless you're born very wealthy. You have to build those quickly before you have kids. And that's what we see. I came from Wall Street, and that's what we see at Wall Street is, they spent, all this money trying to figure out like what is the secret sauce of, successful people in Wall Street. And it's just people that work Saturdays. I mean, literally, like after all, they tried to say, because they wanted to be able to interview people and identify like personality traits, character traits, things like that. That would, yeah, and it's people that work Saturdays is really
Well, yeah,
the
and
differentiating
Ryan,
factor.
I think that oftentimes we think that we need an abundance to achieve a certain goal. And I think that there's just, you need to whip out the calculator and do a little bit of math, right? And so I wouldn't say that, I have, abundance of money that allows me to stop working at 1 o'clock most days of the week, right? I just know that I can afford, right, to stop working at 1 o'clock every day. Does that mean I have more money than I need? No, I mean, never. However, at the same time, I realize I'm foregoing an opportunity cost, right?
Hmm.
It's just, I ask myself, like, am I going to spend, make more money that's going to outweigh picking up my son from school, right? Or, you know, going to his tennis practice, right? He's a kid, right? He's just getting introduced to tennis. I love tennis. I want to watch him play, right? Or playing tennis with my wife, or going to the beach on Saturdays, right? And the truth is I just right now in the career and very young into my life, and I hope I have a really long one, right? There may very well be another part where I want to grind for 20 hours. That may very well come along where I want to put a grind back to my nose. However, right now, I understand that 92% of all the time that I'll spend with my kids is before they turn 18. And so I'm trying to stack that investment early on, right? And then when they're done with me and they want to be
Yeah.
teenagers, I'll go back to work.
Yeah. Yeah. My daughter is going to be 13. It happens pretty quick. So, you blink and, you know, dad used to, we're in the thoroughbred business, and she used to love going with daddy to the thoroughbreds, and dad's not so cool anymore. It happens, it happens quick. So by the time they're 12, 13 years old, it's and then they'll come back around, but she's all about friends. So, and that's the thing that I've learned in personal finance is that goals are very personal. So what one person would consider as financial success versus another is very different. A lot has to do with how we were raised, and the other thing is how much we care about what other people think. You see a lot of people that are just incredibly happy with like a work-life balance, and they just don't really care what other people think. And then you see other people that have a fantastic amount of money, and they really don't care what people think, but they love the grind. Like, why did Buffett go to 94? I mean,
Correct.
he enjoyed the grind, and so that's the neat thing. I was on the institutional side, and all the investors were institutional investors, and for the last 23 years I've been on the private side. And that's one thing that's been interesting that I actually appreciate a lot more than I initially thought, is just seeing the wide range of visions that people have that are so different than yours, but everybody's is right. But the older you get, two things matter more. One is time. So the older you get, the one is time, and that's why with my book, I titled it "Time Ahead," because when you're a young person, you think you have all the time, but the older you get, you realize you're kind of running out of it, and we can't buy more of it. Um, and and then the other thing is that with children, the older people get, the more and more they wish they would have had more kids. That's the other thing that we've clearly been able to identify with thousands of conversations with people.
Yeah.
So
I mean,
it's just interesting how those priorities change
I
as you get
think
older.
that, hilarious. I will go to an investor call quarterly, right, for a company that I originally was a early stage employee of, right. It's still going on. Hopefully going to an exit. Come on, team, let's do this.
Yeah. Good luck.
I'm like, I'm tired of going to your your investor calls. So, so hopefully we get to an exit for a strategic acquisition this year. But it was such an early when I worked at the organization. It was such an early stage of my life, right? I was, you know, early 20s, right, fresh out of the Marine Corps, fresh out of college, right, and I wouldn't call myself exceptional, right? Some people might, but I wouldn't call myself exceptional. But I found my way into an executive role, right? And had a lot of early success, and that built my career, because once you get one and do it well, it's kind of easy to jump to the next, right? And so, but at that time, I was this young LA based, chief, right, of operations, and I didn't want kids, right? Right. At that point in time, I was a Marine, so I already had wives, right? So already done that job. And so, hey, I already learned those lessons. And so, but I didn't want kids. 'Cause I was like, oh my goodness, like, why would I want to, give away all this money I'm making? And I wouldn't be able to have sports cars anymore and all this. And the CEO of the company was a Navy guy, right? And so, he had worked for, the 90s LG days, like the golden days. He worked as an executive director right up there with the CEO. And so he was always saying, we chat back and forth. And I always say, oh, I don't want this. And then now I go to these investor calls and I'm like, oh, I just have my next child. And they're like sitting there like, man, who would have thought Cody Hall had not only one child, but two?
Mhm.
I said, the funny thing about life is if you live it long enough, you get to really, embrace your past, ignorances, right? And so you're like sitting here, at my age, and I get to have my kids. I'm like, wow, like how stupid am I? Would have if I just didn't have kids? Like I would have missed out on so much of what I enjoy today, every day, which not even enjoys, drives my day, drives my motivation. It wouldn't have even existed, right? But earlier in life, I was shunning it away. So hopefully we live long enough to realize that.
Yeah. I mean, hopefully well into the hundreds. That's my plan.
Yeah, that'd be nice.
Especially I was older when I had kids because I was similar career first and built the career first and then had children. So I'm a very old dad, in the it's pretty funny hanging out with some of my kids friends parents, they're I might have 20 years on them, some of them that had kids younger. But a friend of mine, he specialized in end of life counseling, and it's something that's really stuck with me. Since I had this conversation with him, and this is a long time ago. And I was like you, I didn't have kids at the time, and my wife and I were just getting married. And he said the number one regret that every single person has at the end of their life is the same. And I thought it was fascinating. And, it's not money, it's not spending more time with your family, it's not being a nicer person. He said every single person says the same thing, that they wish they would have had more children. And that's something that stuck with me because, like kids isn't sometimes a straight street. You get there's a lot of heartbreak along the way. And my wife and I have experienced some of that. And I just always remember that conversation with Bill. um, you know, I just didn't want to be one of those people later in life looking back and say, man, I could have, we could have had more, and that's, in my 40s having more kids. Maybe I'll be like Al Pacino, did you see him? He's 80 something years
Hey,
old and had a kid.
right. It's so interesting you say that because, I think that so I have a bonus daughter from my wife's first
Oh,
marriage, right? And
awesome.
so I have uh a 13-year-old, well, 12, going on 13-year-old
Oh, there you
daughter,
are.
right? And she has given me a lot of the early stage because before I even had my kids, I had her in my life. And so she has been her own heartbreak, right? When I first came into her life and she was like, 7 years old, I was the coolest thing in the world. She enjoyed me. It was great. this guy, this, dad came into her life. And then like into her teens, it's like, you're not my dad. So, right. It's like, all right,
You
well,
can't tell me what to do, right?
ooh, right. I was like, this is interesting. I said, this happened way earlier than I thought it was going to happen.
Me too.
It was just shocking. But what I think is interesting about it is that, it's a really weird love-hate relationship with it, right? And for me, children, like running a company, it's an emotional roller coaster, right?
Mhm.
This week would be a good example. I was just talking to, head of HR right before this, right? Because, just like, yourself, I recently had to terminate somebody, right? And so that person, it's going to create delays and things like this. And, just last week, right, I was sitting there, I'm like, man, everything is going so smooth. It's going perfect. Like I'm sitting there like working half the days because I was, trying to get everything ready down in Mexico. And then, like a roller coaster, right? You're at the top long enough to see the
Mhm.
beautiful view. Like, wow, this is a really nice view. It's a beautiful day before it drops off.
Mhm.
And, I
Yeah.
feel like that's so much life, right? We hang on to those moments where it's like, man, it's a beautiful day. And then it's like, all right, I'm gonna roll through some of these bumps real quick. And then hopefully we get back to the top for a moment again. And so I mean that's kids, that's business. And I think that humans, so we just have to the successful humans, right? And successful, like you said earlier, like what is success, right? How you define it is much different than the I promise you. I have zero stock in what anyone cares about me. Right. And that allows me to live a different life than most people. But, my version of success and how I view it is much different. So, and how you leverage that against your perception of how life's going is determining on how difficult things are for you. Right. It's like always I say, we're looking at experience of people. I always say the difference between expectation and reality, that delta is either disappointment or euphoria, right? And so it's a wow, it went better than I thought. This is great, or like, oof, that wasn't what I thought. And I think that people who are oftentimes more honest, realistic, and calculated have a more predictable delta. And so, but you can't do that with kids, unfortunately, and business
Yeah,
either,
it's
right?
interesting. Predictable delta is, we like to understand and be able to manage the chaos of owning a business. And one way that we've identified it, that's the advantage of a portfolio manager is you get to date or marry whoever you want as a business owner. And when we look at buying a business, one thing that we like to see is diversified top line. So we don't want to have too much customer concentration. That creates a lot of uncertainty and stress. And same with like our portfolio, we like to have a diversified investor base too, because that can create a lot of uncertainty and stress of single large investors or single large customers if those relationships start to go in a direction that you didn't intend. So that's something that when you look at buying a company and being able to predict that delta, we want to make sure we're diversified, but then we also want to have some sustainable competitive advantage with that company. So we can look out into the future and kind of understand what that delta looks like, and then also understand the time frame around that delta. Because as you know, time is money, and the compounded return that we have is based on the amount of time it takes us to get our capital back. So we really spend a lot of time looking at not only competitive advantages but the time to recoup investment, and
You know,
then that kind of gives us a better control over, I like you saying that delta, and then it allows us then to figure out what price that we're comfortable entering into these businesses. So that's how we can, in our world, in the portfolio manager world, where people think that we have this very chaotic environment that I mean, it is a chaotic environment that we operate in. It's highly volatile, a lot of uncertainty. Being kind of disciplined with those allows us to kind of control that uncertainty and control that chaos inside of the pocket, to use like a fighting term or a mixed martial arts term. We try to be calm in the pocket there,
I mean,
and that's the only way you can do this for like Buffett, did it
correct.
for 60 years. That's how you could do it. So people are always like, aren't you nervous or aren't you this or that? It's like, not at all.
Well, you said a couple really great things there that I think relate a lot to our viewers because a lot of our viewers are young entrepreneurs, identify as young entrepreneurs who either are building a business or have just started one or want to build a business, right? And I say that because one of my good friends who started in the Marine Corps as well, he owns a large security company. He's like, I listened to your podcast once. He's like, I that's not for me. I was like, well, what about it? He's like, I live those
Typical
problems.
Marine,
I
straight
live those
up and honest.
right,
I
right.
love
As
it.
I live those problems every day. I'm not going to go listen to some other entrepreneur's problems. I got my own problems.
Yeah, that's
But
great.
he's like, but I see how it's valuable for people who haven't experienced them yet. And you hit on something that I've experienced 3 times in my career. Twice when helping lead someone else's company, and one leading my own telehelping. I had one where our IPO, our bank Chase Morgan backed out of backing the IPO because we had an over concentration in clients. Right, it was just too risky. Right, and then when I was in healthcare, it was ultimately rectified and fixed later on, but through pain, where we had one particular client just didn't pay well on time. Right, and so cash flow, like you can go from $3.5 million in the bank to we have to, tap into our line of credit, 3.5. And so there was a horrible fluctuation, which made business very stressful. And, we had a similar issue at telehelping. When it started off, our first client was, ended up and was for many years our largest client. Right. And I always equated it being the tail on the dog. Right.
Mhm.
Like we were our own business, but really we were just whatever they wanted us to be. And I think that's a valuable lesson for anyone right here who's building a company, whether you're aiming towards an exit, right? The valuation of being a company who's a portfolio manager like Ryan's going to look at and like, wow, that's a company we can buy because look at this diversity, right? And it's what I refer as a spread risk, right? And that's what we did with telehelping. Once we dropped that big client and we halved our business, right? It was a horrible thing. The business halved, right? But we built back the business over a year and a half afterwards. We were the same size again, but 80% of all of our clients were individuals. Like we went from having clients who hired multiple virtual assistants and call centers at the same time. And so like, oh, we have a 50-person client. This is great. And I thought to myself, what's better? One person with 50 people or 50 people with one
Mhm.
person, right? I was like, you know what? This person catches a cold, I have to cut off an arm, right? This person catches a cold, I lose a finger, right? Like, one client gets mad at you over here, that's fine. I have 49 other ones, right? Versus like this client gets mad, you lose all 50. And it's reshaped our business because now where I used to like have anxiety of like, oh my God, I have a client email. Like what happened in the client's world versus like, oh, I got a client email. Important, but not going to sink my ship. And now the company is far more valuable because of it, because it's stable. But it's a real thing that many people listening should understand that sometimes companies get very fortunate to grab a quick client and it becomes this big daddy whale, right? And then it runs their business. But you should always be thinking, figure out how to use that money you're making from that person to diversify your overall organization's revenue for stability and for value.
Yeah, you want to be in a position where you could set strategy, not have strategy dictated.
Yeah.
And you just have to be comfortable growing, sometimes slow. And, just like our investment approach, it's stood the test of time. And I just remember 20 years ago, huge investor came in, huge, and was trying to dictate how we were going to manage the portfolio. We just said, no, we're not going to do that. And they were just floored, just stunned that we would pass up on the money for control of the strategy and scalability of the strategy too, because that's the other thing. If you're constantly chasing your tail trying to make one investor happy, you lose that scalability factor in a company. But it's easier said than done. If you have
Yeah.
a lot of young entrepreneurs, you got to kiss a lot of frogs sometimes, and there's just a lot of sacrifices, as you know, that you have to make. But I would think if you're starting a business, the rules that we use is how easily replaceable this company is. What are the barriers to entry for this business? And sometimes you have to start a low barrier to entry business to make a money in a highly competitive world, and you can kind of parlay that capital into a better business. But that's something that, we think through. I always use the example with investors, the won the lottery. So if I won the Powerball and I had several $1 billion or had $1 billion from winning the Powerball, I want to own a business that the Powerball winner couldn't go and compete with and take share from. So all of the companies that we have, they just have these really like stable market positions with bright futures, not just good stories in the rearview mirror. So that's something if a business is pretty easy to start, that's probably not going to be a long-term business. So you just have to like get as much profit out of that company as you can. And then you're going to have to move on to a more stable kind of long-term type of business. And I think you see a lot of people that they didn't spend enough time putting the thought into it, because I've met a lot of people over the years. They're like 5-7 years in a business and they are wishing they would have spent that 5 or 7 years on something else. How do you coach those young entrepreneurs to do that due diligence time ahead? What does that look like for you?
You know, I get the opportunity to do a lot of mentorship actually, and the podcast is a great vehicle for that. And I feel like even with my team, I'm always coaching people on how to make sound decisions for themselves. And one thing I always tell people is just because you don't give up doesn't mean you're going to succeed. Right? I think oftentimes we mistake, like, if I just keep pushing, if I just have my head down, if I keep going, it's going to work out for me. Well, the reality of it is it's not actually, and the majority of it, it's not. Right? When I coaching people and making decisions, I say, you know, you have to place your passion in the same bucket as your needs, right? And so, you have to balance that. And, I have been in my life where those buckets haven't always been the same thing, because passion is a luxury, need is a need, right? It's just something that is required for sustainability. If you have family, wife, kids, people need to go to school, eat food, need materials, like they need those things. So therefore you have to prioritize those things. And so I always tell people that if you're able to pair those two and make money, right, is it going to reach your goal? And if you say no, right, is your goal appropriate? So then go through a weighing diagram of what is my goal? Why is my goal this way? Like I always tell people I'm chatting with is like, my initial goal in life of success was $100 million, right? When I set that goal, I thought it was a really nice round number, right? But I really didn't understand what $100 million was, right? And then when I made, a considerable amount of money, I thought to myself, I'm like, holy crap, $100 million is a lot of money. So I feel like I have a lot of money and I don't have $100 million.
Right.
And so I tell people, and I use that as an example to them. I was like, so why was $100 million important to me? It's because I let the world dictate to me what I thought success was. And so oftentimes when I'm telling people how to place their time, you have to come back to, does it meet your needs and does it fill who you are? And if you get those two in the same bucket, sometimes, like you said earlier, sometimes you have to meet the needs before you get to a position to fill your inner bucket. And sometimes those take what I refer to as pit stops, right? It's like a highway and a gas tank. Right? You can burn the needs tank for a long time trying to get to the next gas station to fill up your bucket, right? And you gotta go off here. I'm gonna exit. I'm gonna go on a vacation, right? Going here and exit. I'm gonna buy that car I want, right? I'm gonna get exit. I'm gonna do this hobby I like. And so when we are able to pair those together, it's nice. But oftentimes I find that people just don't know what their purpose is. And so, they say what they want. And so they put their time into that bucket to only realize that when they get what they want, that it wasn't anything to do with what they actually was associated with the purpose. Um, Most of the time I tell people to be real and the honest opinion, I say they just need to fail some, right? Uh, so I said, I tell them to get out, get failing early, right? Fail fast, find out if you like something fast, right? And then the quicker you do that, the quicker you're going to get to the area. You're going to start processing, eliminating things that, well, I like this, or this doesn't pay enough, or, this pays too much, but I don't like it, right? Get through those things as quick as humanly possible, right? Because I've worked at startups that I despised, but I've also sat there and I was like, well, I also want my million shares after this. So I'm going to hold on to this grind and then I'm going to walk away from it. And you walk away kind of dragging your coat sometimes, right? And you're like, well, I survived that. Now what's next? And so oftentimes it gets down to just trying to figure out why people want to do things. Because I feel like oftentimes you said it earlier, if the barrier entry to something is low, you have to ask yourself, why is it low? Right? If something was an instant success, is it going to be a fuse? It's just going to be something that burns out really quick and disappears. I've seen businesses pop up to, millions in revenue and just lie flat for years as they slowly just die off.
Roman candle.
The Roman,
Yeah.
yeah,
Just your Roman candle business.
it just depends on what people want to do. I oftentimes the folks the I don't want to call them kids, but the young entrepreneurs that I talk to, they're just trying to figure out how to make enough doing something they enjoy so that they can have a life that they also equally enjoy. And so they want a job they enjoy enough that makes enough so that they can enjoy life. I find that that's most of everyone I talk to. Very rarely do I get someone, and I've seen them that come to me and they're like, "Well, how do I do this? Because I don't really care about anything except making a lot of money." Because I'm probably not the person to give that human advice. It's just not me. I don't know how to coach them. With lots that Ryan, I know you know this. It's so easy to make money, right? Money can be made. I trade every day, and I have a buddy of mine who we trade. We're trading partners. We do a duet thing. We have reasons for entries and exits, and we do them together, and we bounce our decisions off each other to have a second brain to say, well, actually, I don't support the reason why you're making that entry, right? And then like, okay, I do support that. Let's do it together, right? And we ride the trade together. I was just having a conversation, for context, people listening. This man makes 50 grand a week, right? Doing whatever he wants. He wakes up, he trades, and he stops trading. However, his life is about as interesting as a gray sheet of paper, right? And it's it's right. It's like what do you chase? And so oftentimes people in those positions they chase pleasure or they chase excitement, and those are short lived. And so you have that. It's we back to the beginning, full circle, Ryan. It's like hopefully you can live long enough in life to understand what path you should take, right? And so sometimes it's really hard to coach people into that, which is why I'm not a life coach. Only consulting I do is in sales and marketing.
Yeah, it is interesting with these younger people with this entrepreneurial spirit. The why behind it is interesting. And what we found in Wall Street, because you can come there and make a lot of money, well-worn path. This is a well-worn path. You don't have to be creative. You just come in and grind and you can make a lot of money. It is interesting that with some of these younger professionals that if the goal is to work a lot less, you wonder if they have that work ethic to get them to a point or get their business to a point where they actually can work a lot less. And, like you came out of the Marine Corps like a dog on a chain, probably, right? Ready to just to
Correct.
get after it. And you have that fire in the belly. That's what in martial arts, and we refer to it as the fire in the belly. What gives this person, they were born with this incredible desire to be something, and this other person just wasn't born with that fire. And then making sure that if you point that fire in a direction where that activity is going to have legs and importance. I would think that's, when we start to talk to young people, we give them very similar advice. Like growth requires failure and it requires being very uncomfortable. And you need to figure out what you really don't like to do early in your career. And ideally then, like you're saying, you marry those together. Because what I talk to people about is probably different, is that, if you start working in your 20s and you stop working in your 60s, and a lot of people like to work, so that's the other thing. It's, a lot of younger people want to not work, but as you get older, work really fills our buckets, like I
Yeah.
love it, and a lot of like my colleagues and a lot of my investors, they don't have to work and they still work because they enjoy what they do. And then that's really the secret sauce, I think, of this game is, what I tell people is, you're going to work somewhere around 100,000 hours professionally over your career. You better love it. And, like a famous martial arts champion said, early in your career, you have to love it so much and you have to do it so much that you actually start to hate it because you're doing something you love so much that you hate it. And he's like, that's when you're really starting to achieve greatness, is when you have that balance. And I haven't seen very many really wealthy people I mean, a lot of people, some people get lucky early in the career and early in the entrepreneurial path. It's a lot of struggle and sacrifice, getting out of your comfort zone, doing a bunch of things that you're just not naturally wanting to do. And I just, what's the statistics on failure rates for entrepreneurs? It's, 95%. I think
Yeah.
I think a lot of it has to do with that.
Well, and I, in closing that thought too, is that people always see successful entrepreneurs or successful business people as lucky, right? Like, well, that guy got lucky, right? I can't tell you how many people. I have family who tells me I'm lucky all the time, right? No one ever knows that first 3 years of telehelping, I didn't even collect a salary,
Hmm.
never even paid myself, right?
Hmm.
I woke up 5 days a week, sometimes more, depending on what happened over the weekend, because we had 24 operations with some of our
Yeah.
clients, right? No one else, no one paid me. No,
Hmm.
wasn't no pat on the backs. There wasn't no
Hmm.
attaboys. There wasn't no, oh man, I can't wait to receive this check, right? There was it was like a year and a half into it, I was like, wow, wow, why am I doing this? I'm like, well, I really do like this. Some days I hate it. Some days I ask myself, why am I doing this? But it was years. And I think that's what oftentimes that um whether it's the society, the shorts and everything they have, we just want it now, right? And I think that, you know, my position and you as a portfolio manager can attest to the fact that, anything that comes quick is not going to last long enough to matter. And
Hmm.
so, and back to, the element of raising kids as well, right? If that were easy, if it were just easy enough to put them in front of a YouTube video and have them watch their ABCs, or, send them to a school that's good, right? My kids go to great schools, right? Does that guarantee them to be great human beings? No, right? And so there's just so much that to look at from the perspective. And Ryan, I thank you so much for someone of your experience, right? As veteran yourself and a man who gets to see the life cycle of companies, right? And how they really make it, and what goes on beyond their success. Because when people make it to you, that's kind of a successful point, right? For somebody, right? It's a successful point. And so I appreciate your time jumping on this podcast today. I promised you at the beginning, I didn't know what we were going to talk about. Who knew we were going to really get philosophical about the association of life and success? But, oftentimes people don't get to have these conversations or these perspectives until they're sitting in front of their therapist. So you're all very welcome for this conversation. And Ryan, I want to thank you for your time, sir. It's been a pleasure.
Yeah. Thanks, Cody. Had a blast. Love to come back.
Sir, thank you so much. Enjoy your day.
This video was brought to you by our official sponsor, Telehelping. Need support for your business? Telehelping connects you with top-tier remote staff to help you streamline operations and fuel growth. Go to telehelping.com and get started today.